Kristen King, and welcome to IP Go, the show where we take a look at the IPO world past, present, and future. The U.S. IPO market has been uncharacteristically quiet over the last week. In fact, we might say it's been pausing for breath after the explosive performance of new issues from Affirm and Poshmark. The much-anticipated direct listing by gaming giant Roblox has also been deferred until February, and turbulence and controversy seen in other corners of the market recently means that the hotly anticipated Robinhood IPO is unlikely to come to fruition anytime soon. TELUS is the biggest listing next week, with the Canada-based digital customer experience platform looking to raise $799 million. However, the big action next week appears to be taking place in Asia, with news that the IPO of Ant Group could still go ahead. This is despite a crackdown on the company and its founder, Jack Ma, by the Chinese authorities, who spiked the new issue just days before it was due to go live in November last year. The head of China's central bank, Yi Gang, was speaking at the World Economic Forum, typically held in the upscale Swiss ski resort of Davos, but this year was a virtual event. Yi Gang said relevant agencies are still investigating issues related to monopolies at Ant Group, adding that the matters were complicated. However, he also said that this is a process, and once the problem is solved, the IPO will go back on track to continue consideration according to law. The flotation of Ant Group was expected to be worth around $37 billion, which would have made it one of the largest new issues of all time. Its apparent cancellation sent shockwaves through the markets of the world and cast doubt on what would happen to the billions of dollars that private equity companies and venture cap funds had already invested into the business. The comments from China's central bank chief will have gone some way to calming the worst fears about a breakup or possible dissolution of the business. Staying in Asia, Kuaishou, a rival of TikTok, the phenomenally successful but controversial video-sharing social media platform, has announced its intention to list and raise up to $6.3 billion via an IPO in Hong Kong. Kuaishou will look to sell 365.2 million shares at a price of up to 115 Hong Kong dollars, or 19 US dollars per share. Kuaishou's platform attracted 305 million daily users on average in the first 9 months of 2020 and 769 million monthly users to its apps and mini programs. Kuaishou users access the company's products 10 times per day and spent an average of 86 minutes consuming its content. Kuaishou is backed by billionaire co-founders, and the internet giant Tencent is also a major investor in the business. More than $1 billion of new investment into the business has already been pledged by the likes of Capital Group, Invesco, Fidelity, and Morgan Stanley Investment Management. The shares are expected to trade on February 5th, and at the suggested IPO price, the business will be valued at around $60 billion, though an anticipated surge in retail demand for the new shares could drive that figure considerably higher. That's all we have time for this week, but as usual, make sure you do your due diligence before making any investment decisions. Stay safe and see you next week.